Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you very much for having me.
As we just heard on Wall Street overnight, the S&P hit a new all-time high for the first time in 3 months. Why is that, and what else do you see in the markets today?
Yes, as you said, S&P 500 hit the record high on Monday, while the Nasdaq also a little bit fell short of the the record highs, but nevertheless still on the top level. The reason for those the high indices were because of the U.S. and China are saying that the possible trade deal is soon to be made. And also the investors are looking into the Federal Reserve rate cuts that might happen later this week. Also, some of the numbers are coming out from the major IT sector, including the Microsoft. They are showing a very strong earnings, and that has resulted into sharp rise in the share prices. It is one of the largest market cap stock within Nasdaq as well as the U.S. equity market. And if you look at the overall indices, it's very much S&P is up about 0.56%, and also Nasdaq is close to 8,230 level. Now, Donald Trump have said that he expected to sign a significant part of the trade deal with China ahead of schedule, but did not elaborate on timing. And clearly, this is building optimism from last Friday till now, and continuously affecting the equity market to move up higher. With also interest rate moving up a little bit higher, people are saying and believing that the economic recession will not happen anytime soon. That is having a booster to also the overall equity market rising. And as an insurance, Fed cutting interest rate probably tomorrow night will affect positively in terms of the equity prices further in terms of the future.
Well, now here in Korea, the Kospi started out higher today, likely for some of the same reasons, but it closed a little lower. What's the story in the Korean markets?
Yes, as you said, Kospi started strong, and it actually broke through the 2,100 index level, but it closed down below that. Kospi was pretty much flat today, but Kosdaq was up quite strongly by about 0.8%. Clearly, there's a mixed signals. But in terms of the currency movement, we feel that the overall indices should go up even further in the future as the Korean won continues to appreciate. If you look at the Korean won, it has hit the 1165 territories, and the peak in August was 1223. So clearly, there's been about 4% appreciation of the Korean won versus U.S. dollars, and this is creating positive inflows of the foreign investment into Korea. The reason why today has been showing some correction is because as Chinese equity markets showed some taking a rest, and it showed some corrections after a very strong run in the last 2 days. And people are still doubtful about the U.S.-China trade deal in terms of the full details. So we need to see the actual signing, and the detail needs to be made in order for the further rise of the overall global market as well as Korean equity market. But we think that the deal will be made, and the overall strong growth in IT sector and the fourth industrial revolution sector should continue in the future, which should result into Kospi hitting 2,200 before the year end.
And briefly, Mr. Yu, the Brexit extension, likely also an election in the UK in December or so, has that had much of an effect on the market?
Well, I mean, it's just creating some volatilities, but we clearly do not have any answers yet. Boris Johnson has written to the EU accepting a new Brexit extension until 31st January. But do the EU leaders believe this will be the last delay before the Brexit? Nobody knows. But everybody do know that it is better than no deal Brexit. So as long as no deal Brexit doesn't happen, and that Brexit happens sometime in the future, that should create some stabilities. But until actual signing, the volatility should continue.
Got it. All right, Mr. Yu, thanks so much for sharing your insights with us today. We appreciate it.
Thank you very much.